That 15-year mortgage product is oh so popular. If you follow Dave Ramsey, any of these big gurus that say debt is terrible, right? They always suggest that 15-year mortgage. Why? Because you spend way less in interest than some of those longer terms like that 25 or 30-year mortgage. And shoot, the government is considering getting a 40-year mortgage out right now. Can you imagine getting a 40-year mortgage when you're 20? You're not even paying that stinking house off till you're 60. So in this video, we're gonna quick talk about the 15-year mortgage product, who can get one of those, and what kind of product lives on top of that loan term. And we're gonna talk about that right now.
Yo, what's going on, family? It's Bob Friel. Thank you for spending a brief part of your day with me here today, and a virtual high five for stopping by. If this is the first time to the channel, welcome. We talk about budgeting, finance, buying a home, getting a mortgage, and building the lifestyle so you can live without stress and build towards financial independence. Our motto here is better than yesterday, so you can get out and enjoy those sunny days. I invite you to subscribe, hit the bell, and like this video so we can see each other on a regular basis when we drop those new videos. My team and I, we get calls from folks just like you each and every single day trying to get a mortgage. So if you're thinking about moving or relocating, shoot us a call, text, or an email. However you want to get a hold of us, we've got your back when getting a mortgage and building wealth.
In this video, we're going to highlight a true case study client of ours, Miss Wendy. She was a fantastic client. She's been living in her house for a number of years now. She had about 16 and a half years left on her loan. She had a ton of equity built up, and she was really wanting to just get her house paid off. And she was considering a 15-year mortgage product. The cool thing with Wendy is she is an everyday hero. She's a veteran. So she had the ability to look at a conventional loan because she had fantastic credit for one, 768 credit. She had a ton of equity in her property, which just means that her loan to value is pretty low. As a matter of fact, her property value is $750,000 and she was borrowing approximately $330,000. She wanted to really know what loan is best. She wanted to maybe reutilize her VA entitlement benefits that she could use. She heard about these conventional loans because her sister was also a loan officer that unfortunately couldn't help her because she wasn't licensed in the state of Illinois like we are. So we found each other, we had a quick powwow, and we basically walked and talked through together as a collective group what you're seeing here in our spreadsheets here. So we use a total cost analysis. It's a software that basically analyzes just the nuts and bolts, the actual cost of the loan, instead of just trying to chase that all-important interest rate. Because the fact of the matter is, sometimes the interest rate, it's a liar, right? Because you can technically have to pay for an interest rate sometimes as a consumer, and a lot of times people don't realize that. So the key takeaway for Wendy, she was of course refinancing her loan, which was historically a fantastic rate. At the time it was 4.125, so 4 1/8. The conventional loan product that we were analyzing together was a 2.5% interest rate. The VA loan rate was 2.125, and the FHA loan, again, was the same as that, 2.125. You might be asking yourself, yo, Bob, why is the conventional loan have a higher interest rate? Quite honestly, it's because the government backs VA and FHA loans. They charge an upfront financing fee to utilize that loan. So the upfront cost is a little bit more expensive with that interest rate, basically. So they're going to get some front-loaded cash, the government will, but they're going to offset that with a slightly lower interest rate. So a few of the metrics that most of our clients like to kind of analyze is, what's the difference between monthly payment? Because most of us want to have some sort of housing budget that we can achieve and still live our life, right? We still want to invest. We still want to go on vacation. Shoot, gas is costing, nearly $6 a gallon nowadays. So you have to keep living your life. So of course we want to look at our monthly payment difference between various loan products, but we also want to look at just the overall cost of the loan in a 5-year time horizon. So that's typically for our clients is far enough out where they can feel comfortable, making a decision that kind of encompasses, the near future, let's call it. We're also in this case going to look at the 15-year time horizon because that was the loan term that Wendy wanted to look at. So you can see in this chart that ultimately the conventional loan product was the cheapest overall carrying costs in the first 5 years of the loan. Second was the FHA loan, and then coming trailing in third place was the VA loan. Now you might be wondering to yourself, why was that VA loan so expensive? I'll tell you why, because the subsequent use percentage of the VA is why that costs so much more money. It was an $8,000 variance to the high side over that FHA loan because of the government's charge just to use her VA entitlement benefits. So of course, that one was out. All right, and then if you look at this chart in 15 years, the one good thing about all three loans, they're all done. If you can see, if she didn't refinance her loan, she would still have just over $35,000 left on her current mortgage if she didn't refi. So all in all, to Wendy, none of the products were off limits, so to speak, but one was clearly the winner. Which one did you think she picked? Well, if you chose that conventional loan, that's exactly right. Even though it had slightly higher interest rate over that VA and FHA loan, the stinking government charge for that upfront mortgage insurance premium that they charge just to get those two styles of loan, sayonara. We got the conventional loan, of course.
All right. The time is now to snoop around the channel and get that brain growing. Watch one of these videos right now, here or here. And if you haven't already, don't forget to subscribe, hit that bell, and like this video so we can see each other on that regular basis. Check out our free loan qualification certificate so you can find out how much mortgage you can qualify for and scope out our free mortgage calculators. Stay sweet.